More importantly, above all else, what are you as the operator that's controlling my money, what are you going to do to make it right?
What are the strategy when presenting a deal to investors, especially?
The problem is that things don't always go great. And so we believe in transparency and talking about, hey, here are the different things that could happen in this investment. And here's what we're going to do and how we've backstopped some of these bad things that are going to happen.
What happened when you lose money?
Hey, we're going to make 15% return, right? Well, what if interest rates go up? What if rents go down? What if we have a recession? That's the real what if transparent thing you need to talk to investors about. And so they want, in a sensitivity analysis, what you're going to do is you're going to say,
How do you communicate your
yes,
story and experience to reassure investor that the money is in good hands?
you got to tell, there's two things. You got to make it relatable. And you also, people want to talk about things that did not go that well, and how you overcame that. I recommend people that are going to go raise capital, you start with people that like and trust you and they know that you're a good human being because they've already interfaced with you.
You have a dream of building a real estate empire but felt held back by lack of capital. Well, you're not alone. Today we're diving into the strategies, mindset, and real world experiences that turn no money into other people's money. Joining us is none other than Matt Faircloth, the acclaimed author of Raising Private Capital, a must read for anyone serious about scaling their real estate business with over 15 years of experience and raised multi-million dollar capital. Matt has mastered the art of building trust, forging investor relationship, and crafting a win-win deals with delivered results. How you doing, Matt?
I'm great, Sarojin. How are you? Thank you so much for having me, by the way. Thank you.
Thank you so much for accepting my offer. So it's really appreciated. I read your book, amazing book. It's for anyone who wants to raise money, any seasoned or real estate investors, any seasoned full-time real estate investors. I think it's a great book to read. You give a
Thank
lot
you.
of good strategies. So how do you feel about real? How did you feel when you wrote that book? What was the reason why you wrote that book?
Well, I wrote the book because Bigger Pockets asked me to. And
Okay.
and I've learned that when Bigger Pockets ask you to do something, if you say yes, it's probably a good thing. And so I was a blog writer for them and a regular on the podcast for a while, and they just said, "Hey, we're looking for some new book ideas," and I pitched them a few other ideas. And the idea they liked the most was how to raise money through out of your own network, and they really loved it. And so I said, okay, great. It's something I've been doing for a very long time. And I realized as I delved into it that it's something that a lot of people didn't know how to do, but to me, it was something that I had somewhat stumbled into. But and we can get into that if you'd like, but it's something that I learned how to do quickly, and it's something that I believe everyone should know how to do, is to raise money out of your own network, right? So the way I felt when I wrote the book was I wasn't sure. I felt a lot of the principles that I was putting in the book were fairly obvious to me, is what I had learned in raising millions from out of my own network. But I found in talking to people after I read the book that it wasn't as obvious as I had thought. And I thought that I wasn't sure who all was going to read the book. The book sold, close to 100,000 copies now. It was an Amazon bestseller at one point. So I'm very grateful now, but just kind of walking the road and not 100% sure what it was going to turn into as I was writing it, just putting my personal story out there. And I'm grateful for the success that the book has had for myself and for Bigger Pockets.
It's amazing. Bigger pocket, is it what is it exactly? Bigger pockets.
Bigger Pockets, they're a real estate education space. Like they're a place that not like a high paid guru BS run to the back of the room education kind of thing. They are a company that's there for communities. They're a community forum and a space for people to learn about real estate investing from other real estate investors. So I like to shorthand it and say it's Facebook for real estate investors sometimes when I really want to explain what it is. It's an online community of all people that are, kind of doing similar things in the real estate trade, and are there to learn from each other.
Maybe because I'm a Canadian, that's why I don't know Bigger Pockets. I
Yeah, 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 yeah.
feel like is it more famous or more known in the States, I guess?
There, have you heard of Brandon Turner?
No, no.
Okay, so yes, you certainly are Canadian then. Yeah, he kind of looks Canadian because he's got the big beard and everything like that. He kind of looks like a lumberjack, but he is a one of their podcast hosts. It was one of their podcast hosts and achieved a lot of success through the notoriety he got as their podcast host. Really, really phenomenal human being. Very giving, and he was one of their voices for a long time and is now has moved on to other bigger and better things.
That's amazing. Well, let's dive in, Matt. We have an hour, around an hour, so I want to get the most out of you. So the first
Wherever you want to go, brother, I'm all yours. You drive. You tell me what
Amazing,
you want to talk
amazing,
about.
amazing. So, I'm a mortgage broker. I've been in the business for 8 years now. Also, a private lender, so we do hard
Mm,
money lending. So I raise money as well, not for investing, more to lend money.
yeah,
Uh,
I do that too.
you do that too?
I
Well,
do
I'm
that
not
too.
surprised.
We
I'm
have a
not
fund.
surprised.
We have a fund that issues hard money.
I'm not surprised at all. So, first thing is, the first major important, I'll say, thing is how do you approach how do you approach investors and building trust with them because they won't hand you $1 million, hey, here you go, because you've been in the business for 15 years, 8 years, 9 years. They won't hand you like that. You need to build that trust. And the
Yes.
question I have for you is how do you build trust with people so they hand the money so you can invest?
In the beginning, so let's start with someone listening to this program that is a beginning capital raiser that maybe has done some real estate with their own money or whatever, and they're looking to raise their first tranche of capital from others, not themselves, right? So they are likely going to either approach friends and family, and people sometimes get skittish with that. But you approach people that like and trust you, Sarujin, because you're you, right? Because you're their nephew, or because you're their cousin, or because you're their brother or sister or their child. You're like, you go to your mom and dad. My parents, my mom and dad were one of my first investors, as were my wife's mother and father, right? So very early in the game. And then you expand outside of immediate family. But I recommend people that are going to go raise capital, you start with people that like and trust you and they know that you're a good human being because they've already interfaced with you, okay? Through other life experiences. And they know they know you're a good human, right? And so that's where you start when you raise capital, is people that already like and trust you. If you don't have a track record for real estate investing, you have to start with people that have your track record through life to invest with you, right? Then once you've built that, once you've done a few deals with other people's money that your immediate circles, then you can start pointing to your business track record that you've done. You can say, hey, listen, I've done this amount of fix and flips, or as you've said, I've originated a few hard money loans, or I've bought me and my mother got together and bought that 5 unit apartment building right there, and it's going well. And I want to buy the 10 unit that's right next door. And then you go to some people that you know around you, and you can point to a business track record once you've done a few deals with people that know your life track record. You understand? You got it? So
100%.
that's, yeah, then you keep expanding out from there. And then you get to the point where we do get $1 million checks from investors at my company, but only because we have a long business track record. And I can point to years of company performance that are showing good returns for our investors in that. So you work your way up. But you got to start small and you work your way up from there and then constantly point to the success that you've had, even on the small side. And as it grows, it just starts to snowball and get bigger and bigger and bigger as you go.
Let me ask you a crazy question. Let me ask you a crazy question. So let's say I wanna. I'm sorry, my dog is
It's
barking.
all good. I got one
Can you
too.
hear it? Can you
I'm
hear
surprised she. I'm so yeah, I hear you. I
it?
hear you, dog. I'm surprised your dog doesn't. My dog doesn't hear your dog, and they start talking to each other, do their own podcast, do their own
Yeah.
show, right? Yeah, yeah, yeah,
Yeah, she's
yeah.
amazing. So my question
All
is,
good.
let me ask you a crazy question. So let's say I don't want to wait to get that $1 million. I want it right now. I don't want to build that 15 years of experience or 10 years of
It
experience.
doesn't have to be 15, brother. That's not 15 years of experience that you have to do, but you want that $1 million right now. I know that's your. I know I kind of cut you off. I'm sorry, but you were saying that what if I'm getting into the business and I want to raise $1 million today?
Yeah, right now, and I do have a branding. Let's say I do have a branding. I have a good branding. People knows me in the market, but I didn't start. I'm starting right now to raise money, and I want
Yeah,
that fish. So how do you do
yeah.
that?
Um, you could. Okay. Let's play. You're going to, if you're going to do that, you've got to have a good contact list, right? Of people that like it starts with trust, right? So if you've got a good list of people that trust you, then you can go to them, and that could doesn't have to be three people or just your mom and dad, because hopefully you're living life that just that more than just your parents trust you, right? So you go to all the people that trust you, and on top of that, you gotta have a really good business plan. It can't be, I want to raise $1 million to invest in real estate. Well, come on, man. Because people that know what they're looking at could go on web portals or go meet people that are prominent and have a long, successful track record in that. So your business plan for the money has to be rock solid, if you want to raise 1 million. And you've got to have a really good contact base that goes well beyond, your immediate family and everything like that. So it's possible, but the bad news for you, for anyone looking to do this, is you can't go to like privateinvestor.com and just put yourself out there and raise $1 million and poof magic wand. People think that that's the truth, that you can just, oh, raising money is just that simple. I can just go and put a deal on the internet or a deal on Facebook or whatever. And with no experience, I can go raise $1 million of other people's money. I've not seen that. I've seen that tried many times, but I've not seen it done. So I think that you've got to have a really great deal, a great track record. I'm sorry, a great deal with a great business plan and the track record of experience and of life through your contacts. I mean, it can be done. It's difficult. I'd rather see somebody start. My first investment was 50 grand. I raised 50 grand and I put that into a deal and I did 50 grand. I did a $50,000 project with an investor. I'd rather see people start that way. But hey, we can go big. We can talk about going big too. That's fine.
The real question is, if you had that money, will you trust someone who's just starting, right?
Yeah.
Will you do it? Will you send
Yeah.
that money, lend that money, invest that money with someone else? The
If I
answer.
trust them very well, if I know, the person that I'm investing with, that overall they are someone that is going to do good things and I know they've got a good plan for the money, maybe I'd consider investing. Not me personally, not Matt Faircloth investing, but if I were in their network, I'd have to have another reason why I believe in them. Because that'd be like, you don't want to just meet somebody on the street and then be like, hey, I want to invest in real estate. Well, great. A lot of people do. But show me what you're going to do with the money. Show me what the plan is. And there's just more to it than that because there's a lot of ways that real estate investing can go wrong. And you want to make sure that this person you're investing with has the mindset and the backstopping and the backstop and the plan and the this and that and the fortitude to deal with the investment not going the way that they thought that it was going to.
100%. Let's talk about crafting story, right? You emphasize a lot about the importance of credibility. How do you communicate your
Yes.
story and experience to sure investor that the money is in good hands, right?
Yeah.
So how do you craft your story? Like, is it through your experience, the track record you have? Is it from your personal story?
hmm
What's the best strategy for that?
You got to tell, I mean, there's two things. You got to make it relatable. So if you want to tell the story of you personally, make it something that people can relate to. And you also, I find that people want to talk about things that did not go that well. and how you overcame that. Most people see through the sizzle and the pomp and circumstance and the you're amazing and you're a superhero. Some people don't. But I choose not to market myself that way. I choose to be very transparent and very, hey, listen, this could go left, could go right, but here's what we're going to do in both those circumstances. So we try to be very transparent as a bottom line to how we relate ourselves and tell the story of the investment. We also tell the story of ourselves, and so I believe that telling the story of ups and downs that you've been through as an individual and as a human are always relatable to people. So I think that's how I bottom line it is to make it relatable, make it transparent that people can see through. And you don't have to get too flashy and sizzly, and people think you do, but it doesn't have to be that way.
Let's talk about pitching effectively. What are the strategies that have worked for you when you presenting a deal to investors, especially those who are new in the real estate investing side? So, do you
Yeah.
have to have presentation PDF?
Yeah.
Is it the best way to do it, or it's just having a conversation and simply talk about your personal records, but not having
Yeah.
a presentation like you're in school or you're doing a pitching through a PDF presentation.
It depends on how you're setting it up, right? It depends on who you're talking to. Obviously, on the web, if I'm talking to you and you're up in Canada and I'm down here in Pennsylvania in the US, then yeah, man, unless I want to buy myself a plane ticket to fly up and meet with you, then we're not doing it face to face and doing it more personal. I've done plenty of pitches face to face, and I've done pitches over the web like this. What we typically do now at our size is we would do webinars. We ask people to join a Zoom webinar like you and I are talking now on Zoom. Well, people will join a Zoom webinar where I can't see them. They can see me, but it's a one way conversation and they can type in questions and comments in that. We like to do it that way because then I can talk to a large group and present the offering and have a higher success rate. And if I'm presenting to 200 people, half of them can say no, half of them can say yes, and I've at least filtered out that. And a few can say maybe, and I can still talk to them offline or answer their questions on the webinar to answer their questions there. So that's how I like to pitch. But when you're pitching a deal, especially a real estate deal, people have a few very specific questions they need to get answered that I've discovered that when you're talking about real estate investing with people, right? And the questions are in this order, right? And most people pitching deals turn this around the opposite way. But the way that the flow of the questions that need to get answered are like this. Number one, why real estate investing? People think that people pitching deals, perhaps you and me, think that people understand real estate as well as you and I do. They think that the world realizes that real estate investing is a good investment and it's better than the stock market and it's got tax advantages and it's got cash flow and all those things. But they don't realize the truth is not everyone has read Rich Dad Poor Dad like you and I have, right? And so they don't understand assets and liabilities and doodads and investing and everything like that. So there is a piece of a pitching a deal that involves education and understand help people understand why real estate investing in general. So why real estate investing? First question. The second question is why that asset class or that market or that specific strategy of real estate investing. So for me, it might be multifamily, it might be my debt fund. One of those kinds of things. For someone presenting self-storage, it might be why self-storage. And also it is why self-storage in Montreal, Canada, or in Philadelphia, Pennsylvania, right? Whatever it is. It doesn't matter where the deal is. It just matters that you're able to tell that investor why that market is a good place to invest because you can't control the market as much investments as you make in Montreal, Canada, you will not change Montreal, Canada. Montreal, Canada is what it is. It's going to go the way it's going to go, regardless of your investment strategy in it or not. When you invest in a market, you are participating in that market. And if the market goes up, great. Then you chose the right market. If the market goes down because job losses and because of declining populations and things like that, then you chose the wrong market. And in that, so you have to present the market and the asset class, multifamily, whatever it may be. Um, Thirdly, then it gets into why the deal, right? And also why you as the operator. And those are the questions. And the deal is really the last thing. But when people present deal solution, they want to talk about, they want to start with, hey, I've got you remember, you're talking to someone who has never invested in real estate before, likely, who does not understand why they're investing in a certain market or whatever. And you're going to start with, hey, I have a multifamily deal that produces 18% cash on cash return, right? Think about that. But that's what people like to start with. They like to start with what the dollar returns on the investment are going to be and how great the investment is. You got to flip that script all the way around and turn it around start at the back of why real estate investing, why the market, why the asset class, why you as an operator, why are you going to stop this thing from messing it up, and what are you going to put into the deal, and what is your involvement in the project, and why are you going to be the reason this deal succeeds, and then what's the cash on cash return? What's the IRR? What's the business plan? Those kinds of things. That's really last of the way I pitch a deal.
100% because there's many folks that like us who are doing the same thing. So why this person has to invest with
Yeah.
you? So what's the brand behind you? And another
Yeah.
question I have for you, Matt, is you were talking about some people don't really invest in real estate. They're just curious, so they come to see this webinar, like you said. Most people, in your experience, will you say they have more chances of closing someone who knows about real estate, who invests in real estate, and who's ready to pass that money, or you also have good experience with the people that don't have any real estate experience, but they have money, so they're easy to work with. Which one is better?
They're both great. We have many. I have one investor that has 70 passive investments. I have one that has over 150 passive investments. So they're very seasoned, very savvy. And I've worked with many investors, many that have never invested at all in anything outside. They've only invested in the stock market and in Wall Street. That's all they've ever done. And so I've done both ends of the spectrum. And obviously, when you're working with someone who's savvy, you don't need to explain why real estate to them, and everything like that. But with someone who's just getting started, you do. This is why it's important to seek to understand first, you know. And so when I am talking to an investor, I like to understand where they're coming from, why they're even interested in hearing from me, what they want to get out of real estate investing. Because people that invest in real estate typically do it for one of a few things, like they want tax advantages, cash flow, wealth preservation. It's not all those things. It's typically one of those things. So I like to understand what they want to get out of it, and then I can explain to them how real estate investing and how working with me will help them achieve their goals.
Will you say that pointing out all those advantages of real estate, will you say, do you present all those advantages in a presentation, or you keep it for one, you keep it at one because you know your profile, your investor's
Uh,
profile. You
if
keep
I'm
it
talking
one.
to a big group of people, they're going to hear the whole thing. If I'm talking to a big group of people, I might talk for 5 minutes in the presentation about how the income tax leverage that we can provide and the tax losses that are legal in real estate investing in the U.S. that you can use, right? But there might be an investor that has a retirement account. And in the US, you can invest your IRA, your retirement account, into a real estate project. And an IRA is a tax vehicle. It's already a tax loss because it's tax deferred, right? It's a tax protected vehicle, meaning so tax losses don't matter when you're in that tax vehicle. So they're going to have to just listen to me talk about tax losses, even though that doesn't matter. What really matters with an IRA is wealth preservation and wealth growth, long-term wealth growth. Because they want to be able to retire with a lot more in that retirement account than there now when they retire, right? And so they're going to have to wait for the presentation part where I talk about how you can compound returns and grow wealth exponentially through real estate investing. So I touch them all if I'm talking to a group.
That's great, great insight. Let's talk about the online game, the online strategies. So, there's a point where you don't have any more contacts to reach out to. So like you start with your family and friends, and then you reach out to other people that you have experiences, you have relationship with in your business. But then if you want to expand, one of the great strategies, one of the great vehicle is online, doing it online. So you said webinar, so I think you're very good at this. If we're right now talking, is because I found you online, and then like once I saw your book, once I read your book, I saw one of you, couple of your podcasts. I'm like, he's the right deal. So let me talk to him. If you ask me, hey, give me $50,000, it's gonna be much easier for me to like trust you because known you through
Yeah.
screen, right? So someone who wants to like get into the online business, the online game, and pitch to other investors, you said you have a webinar. So how do
Yeah.
you approach people to join your webinar? Is it through Facebook groups? Is it through Facebook ads? How do you do it to approach multiple people and then you pitch your idea? Is it big? Is it because you have a big following? Do
Well,
you,
no, yeah, I get a big following because I know how to attract attention, right? And so you get good at attracting attention. Have a podcast, go on podcast. But beyond all that, add value and at no investment of no cost. If you create free value, and people will follow you because you're trying to help them legitimately. Bottom line, above all else, you're trying to help. And that's what we've done over years at DeRosa Group, whether that's through our YouTube channel, or through our company website, or through all the work that I've done through Bigger Pockets. We are constantly just trying to help people. And I make it very easy for people to find us through our website and there's a mechanism called a lead magnet, right? Let's say that someone is really excited about, I don't know, Pittsburgh, Pennsylvania. Okay. So what they're going to do is they're going to go and write a white paper, a couple of page document about why investing in Pittsburgh is the best thing that you should ever do. And it's a great investment strategy, and it's something that's worth talking about further, and it's something that's just that's a good move to make. And so then they go and talk on podcasts or go and promote it on social media, but whatever, about why, hey, you should consider my Pittsburgh investing strategy white paper, right? This is just the example I have, but that lead magnet could be anything. We have quite a few of them on our website, on my website, but they're made to add value to someone for free. But one thing they have to do is they have to it's an even trade. You give me your email address and I'll give you just about everything you want to know, right? You want this white paper? Great, here it is. I have a white paper on how to invest in multifamily and buy your first apartment building for free on my website. There's all kinds of other stuff out there on our website as well. So those are called lead magnets. Once I've got someone's email address, I can engage them in a deeper conversation. I can tell them more about what my company's up to through my newsletter. And when I have a deal, all I have to do is say, hey, we have an opportunity. You should attend the webinar next Tuesday at noon Eastern. I'm going to talk more about this opportunity. So once you've got those email addresses, you can present opportunities that you may have to everyone in your email database. Marketing is all about harvesting email addresses through people that may want to do business with you. Then you convert those, I call them eyeballs, right? Harvesting eyeballs to your company and turning those eyes into potential dollars that may want to invest. And the way you harvest those eyeballs is adding free value to people. It's Gary Vaynerchuk 101. I love Gary Vaynerchuk. And it's a very simple strategy. You add value to people first, and they will start following you. And eventually they'll turn into a raving fan. And when you've got something for them to do business with you in, they'll be ready. And that's how you turn them into a yes before you even have a deal.
it's amazing. Thank you for sharing. Let's talk about
Mhm.
managing expectations. Hmm. Like when you're talking about asking other people money, you got to talk about you got to talk about how this deal is gonna go, how this deal is gonna do, right? It's all about transparency. How do you balance transparency about risk with the need to inspire confidence into the investors?
Sure. Well, it's the transparency is a interesting thing, right? Some people stay away from it because they don't want to talk about anything bad that can happen, right? Everything's going to go amazing or make you lots of money and it's going to be all great. The problem is that things don't always go great. And so we believe in transparency and talking about, hey, here are the different things that could happen in this investment. And here's what we're going to do. and how we've backstopped some of these bad things that are going to happen. So that's why it's so important that to present business plans and to present here's how we're going to add value, here's how we're going to change these things for the better, and how we're going to make it even we're going to exceed expectations. And if bad things happen, what we're going to do about it. Secondly, what you want to do is there is a mechanism called a sensitivity analysis, right? For an investment where we always, if I put an investment out, hey, we're going to make 15% return, right? Well, what if interest rates go up? What if rents go down? What if we have a recession? That's the real what if transparent thing you need to talk to investors about. And so they want to, in a sensitivity analysis, what you're going to do is you're going to say, well, this investment is going to produce 15% under today's market conditions. But if we have a 5% reduction in rents, which would be a result of that would be something that would happen if we had a recession, right? Interest rates would continue to go up. That's another thing that could happen, right? Here's what the return on investment would be if really bad things happen in the economy that are outside of my control, right? And so that's one factor you want to present. And then obviously, as I said, in your business plan, you're going to present things that you can control. So we're going to renovate the units to the point where they show up a little bit stronger, a little bit more better condition, and those kinds of things. So you present to bottom line at Solution, you say, here's things I can control, and this is what I'm going to do to avoid market corrections, avoid bad things. And here's things I can't control, market conditions and those kinds of things and global economy factors. And here's what happens to your return, Mr. or Mrs. Investor, on the deal if those bad things happen. And the bottom line is that you don't guarantee anything. I can't guarantee 15%. Even in a hard money loan situation, Sarujan, I can't say I'm going to loan people my hard money at 12% and they're going to pay me. What if they don't? Well, the what if on a hard money loan is I'm getting collateral. I'm getting a personal guarantee. I don't lend the money out on too close to the property value. So I go nice and low loan to values and things like that. So you tend to show the hedges that you've made and gladly explain those to investors and explain why you're making those conservative moves because of the bad things that could happen in the investment and things that are outside of your control.
Listen, and the best thing to do is talk to them about how to save their money, how to keep their money safe. As long
Hmm.
as you're able to do that, and you have a good track record, it's going to be much easier for you to have their trust. Let's talk about building relationship with those people. Let's say they hand you $1 million. You're giving them amazing deals, right? But there's a lot of there's a lot more sharks out there who wants to have
Yeah.
the same money. So how do you build that trust? Do you invite them to go to restaurants here and there? I'm sure you have investors all across the states. So how do you make sure that this person wants to keep dealing with you when someone else can give them a 1% more, 2% in their return? No, how do you do that, Matt?
Well, two things. Number one, I hope that I'm not the only place my investors invest, right? If they can get 2% somewhere else, tell me about it. Maybe I'll invest with you. But I don't want I don't want to be the only place people invest their money. I want to be one of the places that people invest their money so they can truly diversify. Because I don't do everything, right? We only do hard money loans and multifamily, and we also are looking at hotels as our company. But that's it. If you want other things, you should invest elsewhere. And that's number one. Number two, we try and keep people comfortable to the point where people come back to us again and again and again to invest by putting out transparent communications, by putting out regular conversations with investors, and monthly updates with how their money's going and everything like that. Yet again, it goes back to transparency. The best way to get people to invest with you over and over and over again is to maintain their trust. And the way you maintain their trust is by regular communications. Don't, for goodness sake, don't make the day they give you their money, the last time they hear from you. Make sure they hear from you regularly. You can't just move on to the next investor once they've given you money. You got to, like, that's when really the opportunity for you to prove yourself is there.
Understand. And in a day-to-day business, you're very busy with a lot of things. You have to manage your deals. You have to, go on site sometimes. You need to manage your investors. There's so many things to do in a day. So, do you have any automations that can help you keep that relationship in a close way? So,
Hmm.
basically, one of the ideas that I have is, putting content out there so those investors see you all the time, so they kind of feel like they know you, right? So
Yeah.
that's one of the ways I do it in my business. Do you have anything in your business
Sure.
that you can share with us?
We put out social media content every day, right? So we put out multiple video. We're a big video company. So we put out one short form video a day, and then we put out three long form videos a week. On top of that, and that's just is a way for people in the marketplace to know that we're still there and then we're still relevant and then we're still doing work, right? Secondly, we do regular email campaigns. I probably email our database, which we have like I think 8 or 9 thousand people in our follower base for our company. And so I tend to we email them once a week, just an article we might find, something we might find interesting, a offering to join us on an investment, and obviously a newsletter. We have two newsletters that go out on a monthly basis. One general and one just for our investors that just updates them on things we find interesting or things that they should be aware of that we're doing. Sometimes just an update on one of our properties. Hey, did a tenant appreciation night and whatever it may be, or we had trick-or-treating for Halloween at one of our apartment complexes. Here's some pictures and some videos and stuff like that. Isn't this cool? So anything you can do to communicate, you got to communicate with your investors regularly because they have many other things pulling for their attention and their lives are busy, right? These are people that have wives and kids and or spouses and activities and their jobs and whatnot. These things are all pulling at their attention. And if I don't put something out regularly to them, they will forget about us because I shouldn't be in their top five priorities. They have many other things that are way more important than DeRosa Group is to them. And so I have to stay relevant by putting out regular good content to make sure that they know that we're still here.
You're right. You're right. Let's talk about something that a lot of people they don't like to talk about. Is what happened when you lose money, right?
Yeah.
Let's say you ask an investor
Communicate.
$500,000. So what do you do?
Communicate.
Communicate.
I have other friends in this business, or not, they're not my friends. These are other colleagues that I would say in this business that are syndicators or capital raisers too. And that when things got a little bad and when money started to get lost in the business or in the investment, they did not communicate, or they either were not as forthcoming about the money being lost, or it's just because they want to look good all the time, right? Or for whatever reason, they didn't communicate well with their investors. And I think that's an enormous mistake. We have had deals that lost money. We've had that got stolen through a vendor. We've had money that was very delayed. We've had deals that we had to go back to investors and get more money so we can keep things going. And we just we're very open with communications. We're very transparent. This is what happened. This is what went wrong. And more importantly, above all else, this is what we're going to do to make it right. They don't, again, they understand that bad things happen. But more importantly above all else, what are you as the operator that's controlling my money, what are you going to do to make it right? And that's above all else. And I mean, I've had deals that went completely south and we lost people's money, but we didn't stop. We made sure they got it back from us, even from another deal or whatever. I've never, ever, ever lost people's principal, right? I've certainly had deals that didn't go the way that I wanted them to with regards to dollars returned, profit, let's say, because a lot of things happen. We've exceeded expectations and we've underperformed on expectations, but I've never lost people's principal, and that's because we make sure that the actions that we take are eventually going to get them at least their money back, at least with some profit on it too.
100%. The big word is communication, right? So if you're losing
Keep communicating. When things are going bad,
yeah,
communicate. When things are going great, communicate.
yeah, yeah, because this person, let's say I'm the one who's investing the money, and I see this deal going bad, or my money is like, it's kind of losing. Having someone who tell you exactly what it is, what are the options, how can we recuperate, recuperate some portion of the money, obviously will give me a better trust on this person.
Hmm.
Okay, he's losing money, it's out of his hands, it's the market, it's out of his control. So what do you do? So there's I can't be mad at him, right?
Yeah,
Only
yeah,
thing
yeah.
that I can do is, hey, okay, what can we do about it? Find solution. Let's exit the deal with small loss, right? Those are the stuff that I'm looking for in someone who's investing my money. 100%. Okay,
Hmm.
let's dive into the rapid fire questions. We're almost done,
Oh
Matt.
boy,
All
I'm ready. I'm ready. Here we
right.
go.
So the first question is, if you have to go back to your younger self and you're
Mm.
just starting as as a money raising company, right? What are the things you would do with all the experience you have right now? So you have to go back and give you one advice to the younger self. What would you do? What kind of advice would you give him?
Stay focused. I when I first got started, and we're not a money raising company, by the way. We're just a real estate investment firm, and we started with our own money, and we grew into doing other people's money. But raising money is just one of the vehicles that we use to get where we want to go. But and I'm not, what I would tell myself is to stay focused because we did fix and flips. I was doing wholesale deals. I also had some rentals. We were doing some consulting work, all the things, right? And a lot of times to keep our lights on, to keep to stay relevant and to just, not go bankrupt that month, right? But I realized looking back on it that doing a lot of different things at once means that you're going to end up not becoming great at anything, and staying focused in one investment strategy will allow you to become great in that investment strategy through focus. So that would be what I would tell my younger, just getting started self.
Sorry about that. Okay, perfect, amazing.
No, no,
And
it's okay. Yeah.
beside your book, Matt, what are other books you will recommend people to read to become better, either raising money, either better
Hmm.
at real estate investing, or simply mindset?
Rich Dad Poor Dad is a great mindset book. Those that are looking to build a real company, Traction is a great book because it teaches you that you can't be everything there is that your business needs for it to grow and function. So Traction and its other book written by Gino Wickman, Rocket Fuel, great
Oh,
books.
yeah.
Building an Elite Organization, written by Don Wenner, is also a great book as well. That's mindset and company building too.
Okay, amazing. Well, I didn't know the last one,
Yeah.
so amazing. And
Hmm.
last question, a podcast you will recommend people to listen to.
Well, I'm one of the hosts of the Best Ever show, so I have to self-promote there a little bit. And my episodes come out every Friday for the Best Ever show, which is the longest running real estate investing podcast
Best
ever,
ever
ever, ever.
show. I love it. I
The
love the
Best
name.
Ever show. Yeah. Yeah, it was best ever, right? I didn't name it, but that's Joe Fairless did. He wanted to create something best ever. So I am a host of the Best Ever show every Friday. So that would be one podcast they should check out.
What do you guys talk about?
What? Just all kind. I talk about how to get your business to the next level, right? Wherever you are, and if you're at level zero on the ladder, the conversations are going to be about how to go to level one, level two, and if you're at level 38, how to get to 39, right? It's really about how to level up in the real estate investing business.
Amazing.
Yeah.
And if someone wants to contact you, I know you offer different services. Can you tell me
Hmm.
more about what kind of services you offer? How can people reach out to you? Can Canadians also reach out to you?
Yes. Yes, they
Bring it
may.
out there.
I don't speak French.
You
So
don't
if you
speak
do,
French.
if you, yeah, that's okay. But they can go to derosagroup.com, DEROSA, derosagroup.com. And we do have other folks that invest with us that are Canadian. So I can certainly, we'd be happy to talk to them and figure it out. There's certain mechanisms and things they have to do on their end before they can join us in investment, but we're down to figure that out with them. So that's derosagroup.com. We offer investment services primarily. We have education programs and that kind of thing that are geared towards helping people become better, stronger, more elite passive investors and to live the life of their dreams.
Thank you so much, Matt, for your time. It was a pleasure talking to you. You gave a lot of golden nuggets. I'm sure a lot of people can take one or two of your advices and scale their business. You helped me a lot. Yeah, I got I got a lot of knowledge from your podcast, from this podcast. So thank you so much. I appreciate it.
Thank you, Sarujan. I'm very grateful for this conversation too.